Hey traders, Raghee here. Welcome to Charts and Coffee for Thursday, September 30th, last trading day of the month. And, if we're going to see any more redemptions, if we're going to see any more weakness, again, concentrated these last 3 days typically of month's end. Somebody emailed me and said, Rog, where do you get this last 3 days of the month, first 3 days? So there's a really cool white paper that was written called Dash for Cash. And I believe the Wall Street Journal has an article about it, which kind of synthesizes what it really does tell you. And that article's called Month End Black Magic. If you have a Wall Street Journal subscription, I think it's behind the paywall, but you can check out the Dash for Cash or that. And it's pretty cool as far as what it tells you about this rhythm. I think also that when you look at the sample size of the white paper, if you read it, it's a very thorough one. You'll see that the sample size has pretty much been the uptrend of the last 10 years. So the bias in an overall uptrend of redemptions, say the end of September, and the reinvestment the following month it's higher in uptrends, right? I mean, there really isn't a great downtrend sample for this. And CHOP is probably going to be a little bit less so. So as we go into October, I'm not looking for the same degree of reinvestment after this end of the month redemption period. So I think also one other thing to mention is that we really haven't seen sort of the classic, and look, this is not anything, secret, magical. I mean, a lot of folks know end of year, end of month, not unusual to see so the window dressing phenomena. And it works both ways. What I mean by that is strong stocks get stronger because window dressing means not only putting more of the good stuff in the window, but it also means removing the bad stuff. So usually weak stocks get weaker, uglier, and strong stocks get stronger. And we haven't really seen that. And even some of the questions that I've received about possible rotation, I don't really see a lot of rotation either. I think we continue to see, say, a really strong movement in XLE, OIH. We continue to see strength in XOP. And that's less to do, I believe, with money coming out of necessarily tech, semis, whatever, but more so money going in because of the strength in crude and natty. So those cover some of the questions that I've been getting. And let's jump into some of the questions here from this morning, kicking it off with, hey there, James, how are you? ZC, sure. So talking a little bit about corn. ZC has a 1, 2, 3. Yeah, that has triggered, but has lots of resistance above. Yeah, and not just any resistance. We have resistance at a level that I would say transcends technical analysis. By the way, I don't consider myself a technician. I love indicators, but I think technicians are sort of a little bit more indicator heavy, regardless of how we define it. There is one indicator, and really only one, and it's really one setting of one indicator that even if you think charts are the things you find next to a sunken ship at the bottom of the sea, or you think they're the end all be all for decision making, everybody somehow, regardless of where you fall, knows what the 200 simple or exponential is. That is what I mean by it transcends technical analysis. And then if you start looking at all the 50, 200 combos, to the upside, the golden cross, to the downside, the death cross, all those end up being things that even your sort of casual chart watcher sort of knows. They're sort of magically aware of that phenomena. And because of that following, you get a lot more reaction. So yeah, on the south side of that 200, that's a significant resistance level. And then you might say, well, Rog, there's no point of control there. That is true, but look at that resistance just above that level. That's pretty interesting. So your resistance could extend clear to about 560 for that ZC 1, 2, 3. But yeah, good 1, 2, 3 just be aware of what's waiting overhead. But yeah, I like the setup. So would I wait for that pullback after the breach? I love that. Yeah, I can't help myself. I definitely do. All right, next up, uh, Duke. Sure, looks good. How do I see it? So in terms of Duke, well, setup looks good for right setup. What is the setup, right? So if I'm looking at this one, well, first thing let's go right back to that 200. I have a minor low here. That minor low was taken out yesterday. I think the bigger problem isn't the pattern. That's a nice pattern. The larger issue is getting through that 200, getting through not one, but really two significant volume ledges. Here we have a volume ledge. Here we have the point of control. So, and my other problem is the structure of this market. So I guess looks good, for what? For a short, probably. There's a really good argument that it could look good for a short. And, Duke is a heavyweighted name in the utilities. And when you look at utilities, also south of the 200, also red grab candles, also red structure. I know there's a lot of talk about rollover in the broader averages and what TNX means to the Qs, etc. But when I see utilities that weak, I don't see traders running for cover. I don't see traders sort of hiding out in those corners of the market that they typically like to hide out in. Yes, it could flow elsewhere, granted, but I don't see that kind of running for cover. But really interesting. And yes, I mean, good for a short is the way that I'm looking at it, if anything at all. So thanks for the question. ARC G. All right. So anytime I look at an ARC name, it doesn't do the people behind the ETF, and it doesn't do their duration any justice to sort of pull up the daily. Although kind of interesting structure where maybe there's a bounce in this area, but we're just starting to go double red. For me, anytime I bring up an ARK anything, ARK fill the blank, I got to do it on a weekly. I think the duration has got to be longer, and I seldom trade them. I will say my larger position is actually Michael. My largest ARC position is actually ARC G. It's the one that I find the most interesting. It's also the only one that's Tesla free. Now, whether that's good or not right now is a whole other conversation, but it's the only one that's Tesla free. So kind of interesting. But yeah, I always pull it up on a longer term time frame. I think about the longer duration. And so I don't really have much to say about it other than there's a pretty good chance that we bounce off a -2 standard deviation, Darvis support. That could be an interesting place for a bounce. But if I'm looking to add more, not add, I hate that verbiage, but if I'm looking to tactically continue to build my position, add for me suggests sort of this random knee-jerk dollar cost averaging type approach. To me, this support level is legit. In other words, if I had no position and I'm looking at that level, would I think that level as an entry could stand on its own? So anytime we add to a position, think about it where you have amnesia for all the positions that have come before it. And you ask yourself, regardless of whether I'm in or not, would this setup stand alone? And as an oversold buy, as an oversold buy, there's probably some legitimacy to that. So thank you for the question. All right. Thoughts on JP Morgan? Sure. So let's see here. When it comes to JP Morgan, remember that it is the number 2 weighted name in the XLF, and probably more so than any sector that's going to benefit from higher interest rates, it's financials. I mean, no sector is going to benefit in quite the way XLF, maybe KRE is going. This is the regional bank ETF. Really, none's going to benefit in the way that XLF is poised to, and market participants are responding in kind. So, if this is the tide, and JP Morgan is a boat, but a big boat, Berkshire Hathaway number one, JP Morgan number two, it's a big boat. It's going to move up as well. Um, as far as structure goes, look, I'm not a momentum trader. So when I see a candle like this one or even this one, I'm just not going to buy. I'm sure some people do, and they've been doing quite well. My approach to choppy markets, which we are in, my approach to a choppy market is to wait for an oversold level, and that now becomes something near this point of control. So I can look at two things. If we pull back, say 50%, that might be interesting. But if we pull all the way back down to this area, that would definitely be an oversold buy. And you might say, Rog, what's the likelihood of that? Well, let me show you one that I've done a number of times this year, and that's the Russell. We can go IWM. And if you take a look at this, when you're looking at it like that and you keep crunching in and scrunching in, all of a sudden it becomes really clear. Oh, this is distribution that's been in place since March. And first hit gets our attention. Second hit starts looking like a setup. Third, fourth, fifth, and then kind of running along this 200. I mean, this has just continued to bounce along this level now. Choppy markets, if this is going to remain in a chop, let it pull back, and then that's where I would get involved. But that doesn't mean there may not be other names within XLF, right? I think that's the other cool thing about once a single name like JP Morgan gets your attention, if you sort of think top down, if you sort of maybe work backwards and you ask yourself, all right, well, what else is in financials? And how can I use sort of this pre-curated list of stocks that I'm guaranteed is going to have attention and a certain amount of synchronicity? I'm going to take advantage of that. And this is where, I love to do that. And that, that does remind me that if you already didn't know, next Wednesday, right? Next Wednesday? Yeah, next Wednesday, I've got a new webinar coming up, 8 p.m. Eastern. And we're going to be talking about things like this. So, what's the edge that I get from the analysis that tells me that JP Morgan might get my attention, but it might be, for example, another name. I'm trying to see something that looks interesting. It could be Bank of America. It's going to be a little bit less expensive than JP Morgan to engage, which is important. Scalability is nice. The structure is very similar. Then another one that's going to get my attention is, say, Wells Fargo. Lots of blue grab candles, could be a nice potential break to the upside. Another one getting my attention is Schwab. Another one getting my attention is American Express. They all roughly look alike, right? They all roughly look like JP Morgan. The cool thing about as you go down the list of weighting, the relationship to the tide is a little different. And in CHOP, I will tell you, let's contrast this to a trend. Let's contrast this to 2020. And this will be a lot of what we talk about next Wednesday. In trending markets, the mentality and the psychology is very different in terms of watch list building and how you would engage the market. In CHOP, you've all have probably heard of that saying, a stock picker's market, a picker's market, whatever the asset class is. This is, as we go into more and more and broader distribution, this is more of that fill in the blank picker's market. Because understanding weighting is going to give you an idea of the attachment to the larger narrative that an individual stock has. I probably have more individual stock positions now than I had even just 2 or 3 weeks ago. And that's not because I've suddenly just decided that I want to play stock, just because of the way in which we've transitioned to CHOP. And that's one of the easiest ways to focus on relative outperformance. So thanks for the question. Kevin, what are my thoughts on Etsy? My thoughts on Etsy are, I pretty much went to town on Etsy last month. And I would say a lot of this uptrend might be me. No, I'm just kidding. I went and I didn't go to town on the stock. I bought a lot. I'm looking at my Etsy app right now on my phone. Yeah, I actually I bought a lot of stuff on Etsy. I love Etsy. I love the product. Do I love the stock? It's hard not to step back for me and look at Etsy on a longer time frame. Etsy for me isn't a trading stock all the time. I mean, for me, Etsy's been one of those names that's been in my portfolio a while and probably will stay parked there for some time to come. As far as Clarity would go, we had a pretty nice look at Clarity. We're north of the 200. That sure helps. But I would say you probably want to see a minor low or an inside day today, and then that would lead to a potential setup tomorrow, Kevin. So if you're looking at the daily and you want to engage Etsy to the long side, and I would focus on the long side, let's see if we can't get a minor low or inside day today, and then look for that breakout tomorrow. All right. LCID. I mean, if you look at the structure, not great, right? Not that that's the only thing we could consider. I mean, yellow JT multi is going to become far more commonplace. So we are going to, whether it's in the free videos, whether when I'm in the options room with you all or the futures room, which I will be in about 3 minutes, or the mastery, we're going to talk a lot more about yellow markets. We've talked about buy the dip every which way that I like to do that. But now that the dip is going to be replaced more so by overbought and oversold jargon and overbought and oversold strategies. What does a trend follower do when the market goes into chop? Well, two things they can do. They could not do anything, just kind of wait out the sideways movement and wait till the market reorganizes to the up or downside, either way. Or they shift gears. They put their trend following tools aside, and they bring up tools that take advantage of oscillating markets, which are typically oscillators. Use oscillators in oscillating markets. I would think that's fairly obvious. Yeah, you find markets, you find tools that identify overbought and oversold. The one that comes to mind is the one that I've been using the longest. That would be a slow stochastic. Ready, aim, fire definitely comes to mind. So you find tools whose main job it is to decode chop, and chop decoding, no more buy the dip, right? Buy the dip gets so maligned because frankly, the folks making fun of dip buyers don't know what it is to buy a dip, or they're thinking that anytime the market heads lower, these sheeple dip buyers just start zipping into the market. If a dip buyer is a tactical dip buyer, they know that dip is synonymous with a retracement. They know that dip is a pullback to where? That's one question. But I think the one that precedes all of it, which is really what's going to be this sort of somewhat painful transition that a lot of trend followers like myself are going to have to undergo. It's part of the game, right? But it's when I no longer have a trend, I'm no longer dip buying. When I no longer have a trend, overbought, oversold, slow stochastic, ready, aim, fire, etc. And so the first thing we have to do, especially now that the broader averages have transitioned to distribution, the Dow's been in distribution. If you checked out my free video from yesterday, where is it? Yeah, this one right here. A lot of traders have been asking, Rog, when are you going to short the market? And it's not when. It's not a when question. It's what and why, right? So when somehow suggests that there's going to be a point in time where it just makes a lot of sense to suddenly just start shorting everything. No, what's going to make sense is finding the sectors that are transitioned to downtrends, finding the indices that have transitioned into downtrends. So if you want an idea of how I do this and which market, and here's your punchline. It's the XL. Is that the right one? Take a look at yesterday's free video, and it's the XLI. If you're looking for shorts in this environment, go take a look at XLI, and it's really an offshoot of the DIA. All right. So, anyways, that is what we have going on, and I think it might have been is it the video from the day before? Anyways, I'll make sure I cover this the next time I see you all in the rooms. I'll be in the futures room in just a moment. Those of you in the options room and the mastery folks, I'll catch you later on today. And my options folks, I'll be with you all tomorrow for the close, and we can dive into this topic a whole lot more. Rog, where are the shorts developing? It's not where you might think it is. Definitely look at the Dow, look at the XLI, contrast that with, say, QQQ, contrast that would say XLK, and you'll see, oh, one's already tumbling down the backside of the mountain. All right, be good to each other. I'll see you tomorrow.